Hello, Quantum AI investors. Another update, July 14th, Bastille Day for those in the know. It's been a while since I posted, been on the move, so apologize for that. But let's go over a few of the common stocks that I'm looking at. Um, so we could take a look at GOTU. So I'm going to go through my list of stocks that I'm watching here with a little TA or technical analysis on the chart. GoTo, I do like the setup here. Overall with GoTo, we do have RSI that's increasing. We also have accumulation, and also it looks like potentially a bullish cross between the 50 and the 200 day right here is happening. Now, one thing I would like to point out with this stock is this line in particular, which it connects this high here and this recent high. And if we zoom down, we can also see there's another line here that we can draw. If we zoom in, we can draw this line too, which kind of looks like a pennant formation. So and that's an if we break out at the top of this pennant formation, I would expect maybe even a breakout, a retest, and then head much higher. This looks like a very tight formation. Usually, when I see this type of behavior, we're at the end of the pennant. We expect a huge move coming, and it looks like with the Elliott wave cycle, if we say 1, 2, 3, 4, maybe, and then 5, it looks like maybe it's in the fourth wave of an Elliott wave cycle. So if you believe in Elliott wave theory, potentially we're in a fourth wave here with GOTU. This could be a bearish cross happen. That's why we haven't broken out of this pennant. I really want to see this breakout either above or below, but I think it's going to head higher. So let's watch very tightly here on this one. If it breaks above this $4.20 area, with volume, it's going to head much higher, probably in the um, 7 to 8 range, I would guess, for GoTo in the next, let's say, 3 to 6 months. So I don't doubt that would happen. So another one is that we'll look at is let's go with UNH. I've been watching this one. We did have a bearish cross, and as mentioned before with UNH, even though we have a bearish cross, we have this MACD that's foreboding potentially a bullish cross in the next, I don't know, within the next few months. It's not inspiring, the accumulation distribution here. It looks pretty flat. Stock's pretty flat, but it looks like there's going to be some kind of event. Now, what type of event will this be when this cross happens? We'll have to watch the news cycle, right, and see what what news event corresponds to this cross. Is it going to be a giant bearish cross? We're going to head down, slump downward. But anytime this black MACD crosses the red, probabilistically, it means that we're going to head a bit higher. Here we've headed higher. Here we headed higher short term. Short term, here we headed higher. Again, here we headed higher or flat. Here we headed higher. So it's likely we're going to either A, head higher, or B, remain flat for the next maybe few months. But whatever that is, whatever news event, transpires in this area here, this zone, we want to watch this extremely carefully and see what happens. One if you're risk adverse, maybe you could just buy the commons and average down later. If you're a risk taker, perhaps you want to go into the annual calls, maybe in the 2026 calls. I would recommend at this point probably the April through July 2026 calls for UNH. Premiums will be kind of high, but I expect that this is going to recover at some point. But first, let's see what happens with the cross. Don't buy or trade this before the cross. Unless you want to buy a little on the commons and then just average down at a later date. EBS is another one I've been watching. So we got this huge bearish cross a long time ago in EBS, and it's been in a bearish cycle. But fortunes may be changing. If this can break this 50-day, I think we're going to head higher to $15 per share. Today, it looks like it just got rejected. So if I go on a intraday chart here, it got rejected at the 50-day, right around 760. So we need some kind of other news event to plow through. I do think we're going to have a bullish cross coming here. I don't know when exactly, but maybe in the next few months, I expect a bullish cross in EBS and us heading higher, barring some unforeseen events, and then of course that all bets are off. But overall, we do see RSI is heading higher, which is good. Accumulation distribution is not looking great, but let's take a look. If we could break above that 50-day, I would say it's good for a trade to maybe the double digits in the foreseeable future. For now, it looks like it got slammed with the 50 days, so just you might want to be conservative on that. WHR, which is one that Jim Cramer has been rallying on, is a terrible stock, and et cetera, et cetera. But what Jim Cramer doesn't realize with WHR, which is Whirlpool, is a couple of things. One, we had a cyclical cross here. Yes, there's an impending cross happening here, but there's kind of this cyclicality happening in this cross here, so which is bullish. It looks like overall it's entering a bullish cycle. Now, bullish cycle could mean there are down days and up days. Clearly, when Jim Cramer is bashing this at 90 or 80, whatever it is, 85, it's not a good area to be bashing this stock. There are multiple revenue sources for WHR, notwithstanding a lot of the natural disasters that we've encountered, and a lot of the build outs. The builders are building new homes and new constructions, which you could say is late cycle. We're in late cycle for that. But I would argue that those numbers we haven't seen published yet in WHR, and that a lot of those builds and the new homes and stuff like that will help bolster WHR's bottom line. So I do anticipate this 125 gap to be closed, 127 gap to be closed in the next maybe year or so. I'd say this is a good for a long-term investor. I would wait for a little pullback here. You see this bearish cross that's impending. Wait for a little pullback and maybe get in around 95 or something like that. I think if you're a long-term investor, this is a great stock to be in. If you're a short-term investor, I don't really think it's a really tradable stock. This is more for you plunk your money down, you collect the great dividends, and you forget about it. So that's kind of my take on WHR. Great buy under 100. If you can get it under 100, this is the place you want to be, maybe 90 or something like that. For now, it's maybe in the next month or so, you want to get a little pullback and buy it at a cheaper price if you can. Hain has been in the Davy Jones locker. I mentioned that earlier, that Hain was like, it is it is possible for Hain to break out eventually, but it's been in this downtrend, and unless it breaks out of this downtrend, this upper line here, unless it breaks out of that, goes to 4 or something like that on strong volume, we're not going to see a reversal in Hain. It's just going to keep on going down. The business prospects are going down, but it could be a turnaround story in the future. It's one to watch, but you could start a very small investment. It has a little gap here at 250 or so, and another gap at 17. So I'd say, if you're a risk taker, you could punt down a little bit of money in it and then average up later if the business turns around. But for now, it's a kind of a stay away situation. Another one that is on my list here that we could look at is Sedge. Sedge is Solar Edge, which was one of the worst performing solar stocks maybe ever. I don't know, next to going completely bankrupt. But what we do see in the chart is encouraging. We have a bullish cross, retest bullish cross, and maybe we get a pullback. And if we do, I would argue that that's a buying opportunity if we get a pullback. The stock was like 300 and now it's 26. I mean, we do see RSI rising, which is good. We do see a bit of accumulation happening at the bottom, which is also good. So I think going long here is not a bad idea. You could go, if you get a little pullback, great. If you put in some money and forget about it in a year or two, that's wonderful. So let's go for another one that's one of my I have more confidence in this being a trade, but also a long-term prospect is Caring. Not often talked about, kind of under the radar, huge bearish cycle, but, and there's a big but here, is we see RSI is increasing and a little accumulation here, nothing crazy, but if we look out at the all-time chart, so it's extremely long term, okay, we see we have an ABC correction here, and we have a bullish cross here right at the bottom, okay. This is when fortunes can be made right here. Fortunes can be made right here because you're buying an asset that was, let's just say 60 or so on average, 50, 60, for half price, for 22.90, okay? And this bullish cross only happened a couple of times in history. One time was here, and we saw a run up. And also back here, we saw a huge run up. It went from 20 to 60, okay? Now, Burberry is in the same space and has recovered quite vastly with a similar setup. So I think that Caring is a good buy here. And for the long-term investor, could it be tradable? Maybe. But if you have a 1-year time horizon for Caring and you'd like to have maybe double your money, it is probabilistic that that will be the outcome a year from now in Caring. So I think it's way oversold. They have way too many assets, and they could sell those assets if they need to, and they have been, but pay a great dividend. Yeah, long Caring. There's nothing really else to say about this stock besides just to go long and have a 1-year time horizon for this stock. Now, I don't play the AI stuff. I've mentioned Stoxel. That was a great play, and now it's kind of over. So Stoxel, Nvidia, I'm not playing those stocks anymore. But overall, in the SPY, it looks like we've entered a new bull cycle in the SPY. I do believe that we're in the fourth wave or fifth wave, the SPY. which you don't want to mess with that as a shorter. You just want to let it keep on going, and we're right here, right, kind of close to the top, I would say, of the range. If we break out above it, start a new bull cycle in the market. If we remain in this range, we're right at the top, maybe a few points away from having a correction downward. And where do we retest? Maybe we retest back to this 50-day moving average. We're right around 500, about a 20% decline. Are we overbought? Of course we are. Do I believe the market could roll over? Yes, of course. Market could roll over and put a lot of longs in trouble, but it's very hard to predict the when it'll roll over exactly. In the short run, you could just play this line and say, okay, we're very close to that, maybe within a few percentage points. If we touch that line at 640, you might want to go a little short just to see, as a hedge. But otherwise, especially if we break above there, you don't want to be short. And shorting the market is a very hard thing to do. You see a few downturns, there's small downturns. One is April, that was exception. Small downturns in the market, but then it rapidly returned. And that's what my with Sammy's SMH and Soxel, those plays that I played before, and I was talking about on this channel, they rapidly recovered. And I predicted that in my channel earlier. You could watch my earlier videos. You could watch those videos. But here, there's no signal yet that we're going to enter a new bear phase. It's really kind of a wait and see, and just, long and strong, you just hold your assets. We may get a small pullback, a few percentage points. Everyone's waiting for the big one, okay? And then that means that no one is going to get it right. So the big one is going to come, I think. The big, downdraft in the market will come. If you look at 2V10s, we're inverted for a long time now, and we've never had that severe an inversion and never had a recession follow. So every time we've had a severe inversion, there was some recession that followed. And how close we are to a true market pullback based upon a recession, it's anyone's guess. Could we go another 20 points, 30 points on the S&P? Sure. 40 points, who knows? So very hard to time. Right now, the indicators aren't saying anything, but, remain long, and just wait for a downdraft signal, which we do not have at this point. I agree, by all metrics, we are way overvalued, and we should get a huge pullback in the S&P. But so far, we're in this channel. I don't mess with that. So I believe that we're in wave, let's see, 1, 2, 3, 4. Yeah, so we're in the fifth wave of the Elliott cycle. If you believe in Elliott theory, wave theory, looks like we're in fifth wave. Perhaps we go up a few more percentage points before we have a severe pullback. Let's just play it out and see what happens. Don't short the market right now. In general, it's not a good game plan. All right. Well, I hope you enjoyed this episode. I'll upload this again. Happy Bestie Day, and if you're part of my channel, thank you for watching. Please watch again, and like, subscribe, and comment. And as always, let the markets be with you, and take care.